much more confidence now that we've got a sustainable expansion. You know, it's not a boom. It's not a expansion that's going to offer the possibility of a rapid decline in the unemployment rate. But I think there's much more confidence now that's sustainable, much more confidence that we're able to avoid the risk of slipping back into recession.
That was Tim Geithner, the U.S. Treasury Secretary, addressing the World Economic Forum here in Davos, Switzerland, where world leaders and business leaders and economic leaders are gathered, including one of the people I have sitting right next to me. His name is Steve Pagliuca. He is the managing director at Bain Capital, one of the world's biggest venture capital and buyout firms. He's been a regular visitor to Davos, and I should mention, Steve, that you are also a co-owner and managing partner of the Boston Celtics of the National Basketball Association.
Very excited about both of those things.
I'm
Very
sure
excited about both those things.
But let's talk about the things that interest people most here in Davos, not to say they aren't basketball fans. You listened to Tim Geithner speak this morning,
yes,
and we just aired a little clip from it. Did he make you any more confident about the prospects for a sustained U.S. economic recovery?
You know, he had a very balanced discussion, and they have a tough problem to solve. We have a deficit of $1.3 trillion, and he talked about the fact that we don't have a mechanism in the United States for the Congress to commit to a long-term plan. You know, it's kind of year by year in the United States, and they're struggling with a mechanism to tell the rest of the world that we are going to get that deficit down. But they are working on it, and it's a very fine, tightrope they're walking, because you don't want to pull it back too fast to kill the recovery. At the same time, the only way we're going to have financial stability and growth in the United States again is to attack this deficit and get it down.
At Bain Capital, you guys have to make decisions about where to put your capital anywhere around in the world, where to invest. Are you growing more comfortable with the idea of making long-term investments in the United States, given what we're seeing? Or does a 10% jobless rate scare the daylights out of you?
Well, first of all, we're microeconomists at Bain Capital, so I come here and we get some macro overlay, but we look at businesses each on its own. So it all depends on the price you pay, how fast it's growing, what markets it's in. They're all factors. So we've been very comfortable investing in the United States for 25 or 30 years. It's a great economy, and we'll continue to invest in the United States. We've also expanded into the growing economies of China and India and Europe as well.
One of the issues that the president raised in his State of the Union address earlier this week, competition. He didn't say it, but everybody knows that he's talking about competition with China and with the rest of Asia. Is the U.S. competitive enough, or do you feel as though the competitiveness of Asia and India and other emerging economies is a greater draw for you?
The U.S. is very competitive. Right now we're facing, I think, a tough transition. We have a structural unemployment rate buried in that 10% unemployment rate, a structural unemployment rate, because these jobs have gone to lower-cost countries. So China and India, Brazil have taken a lot of jobs from the United States. That being said, we're still a very robust, innovative economy, and as these countries grow, they're going to need imports of our technology. So we can win, they can win. The fascinating discussion here in Davos is really about this interplay between Asia and the United States. They're growing their economies. There's accusations by the United States that the exchange rate is way too artificially low to promote exports. I believe that's true. At the same time, China is saying the U.S. needs to solve its deficit problem, and they're helping by buying our Treasury bills. They own $3 trillion of Treasury bills. So there's a very robust discussion on saying what's fair, what should their exchange rate be, and what policies should we take to get our deficit down.
We got about 30, maybe 40 seconds before we have to run, Steve. But let me ask you this question. As you look out into the year ahead and into the future beyond that, what worries you the most? What keeps you up at night?
I think what keeps me up at night is we've got to get a policy to get that deficit down. We've had 20 years of spending in deficit. That's not sustainable. And we've got to have the political will. We've gotten into a mentality of saying, okay, nobody likes taxes, but let's just have deficits. That's going to catch up to us. And I think the president's going down the right path with the speech to get that deficit down over a reasonable period of time. If the Congress president can do that, the United States will bounce back. We'll have a robust economy again.
All right, Steve, thanks so much for joining us. Steve Pagliuca, Bain Capital here in Davos, Switzerland.